Hey everyone, good afternoon, good morning, good evening, depending on where you are. Thanks for joining us today. We're going to give folks a few minutes to trickle in the background and probably get started around 7:03. Great, well, I think we should get started with the group here. Starting to see the trickle slow. So thanks everyone for joining us for this webinar on utility scale battery trading strategies, specifically around the ERCOT market. I'm Alden Phinney. I'm a sales director here at GridBeyond. I'm joined by two esteemed panelists, Dr. Siddiqi, Dr. Karimian, to talk about battery trading in ERCOT, which is a very hot topic, especially as the weather heats up this year. I want to thank you all for joining us on Juneteenth, the newest federal holiday in the U.S. We didn't quite realize the sort of timing when we scheduled it originally, but we're really happy that you can join us here and appreciative of the new federal holiday celebrating when 2,000 Union troops landed in Galveston to emancipate the final enslaved people of the South. So thank you for joining us, and if you're listening in after the fact on the recording, thanks for coming back to review with us. So just to get started with some quick intros, Alden Phinney, sales director here at GridBeyond, based out of New York City. I've been with GridBeyond about 3 years, and all of my career has been in flexible energy resources for the energy transition. So working on battery storage, demand response, as well as low carbon generators behind the meter to enable the flexible energy system that we need to increase the penetration of renewables. And I think nowhere is that more salient of a topic than the ERCOT market. We have two experts on the ERCOT market with us here today. So Dr. Siddiqi from Crescent Power, Karimian from our GridBeyond market optimization team. You two want to give a quick intro to yourselves?
Yes, hi everyone. My name is Siddiqi. I'm the president and founder of Crescent Power Inc. We're a consulting firm based in Austin, Texas, and have been in the business since 1998. We are the key designers, first of the ERCOT zonal market in 98, and then, of course, the principal designer of the ERCOT nodal market. A lot of the advanced design features of the market are my contributions. For example, the co-optimization of ancillary services, energy, and point-to-point obligations in the day-ahead market. The Texas two-step mitigation in SCED and other mitigation in the market, as well as the ERCOT credit requirements. So we, as Crescent Power, advise clients on portfolio management, development, marketing, operational issues, as well as offer bid strategies for both the day-ahead and real-time market, as well as the CRR markets. We represent clients at the PUC, the Public Utility Commission of Texas, and ERCOT in regulatory policy matters. We also provide expert witness consulting services on these topics. Thank you.
Hello, my name is Ali Karimian. I'm the Director of Market Optimization at GridBeyond. And what I do is that I make sure the strategies that we work together with the data science team are best in the class. Before GridBeyond, I was a Director of Market Operation at Key Capture, in charge of taking assets to the market day ahead in real time. And prior to that, I was at Constellation. And prior to that, I was at KKR, the private equity.
Great. Thanks, guys. It's good to have you on. Shams, any additional context you want to provide on Crescent Power and the services you provide and the experience you have in the space?
No, I think we've covered it in my introduction. Thanks.
Great. I'll talk a little bit about GridBeyond and then hand it back to the experts here. But GridBeyond is an Irish domiciled company, and it's not for the tax purposes. We're the largest demand response aggregator in the UK and the Irish energy markets. So deep experience since 2010 in some very volatile grids and with increasing penetration of renewables. So we started working with batteries in that context in 2017. We came over to the US in 2019, headquartered out of Austin, Texas for our North American operations. And we trade power in multiple markets. We're a level 4 QSE in ERCOT. We're a scheduling coordinator in CAISO. We're a CSP, curtailment service provider in PJM, supporting some of the largest portfolios, especially around ancillary services. And batteries are a great, resource for ancillary services. So we've worked with about 1.2 gigawatts of batteries worldwide now across the US, Europe, as well as Australia and Japan. So you can see some of our partners here. I'll highlight, we recently closed a Series C investment round with support from Constellation, support from Energy Impact Partners, ABB, as well as other thought leaders in the space. And I think what they really saw in GridBeyond was a tailored data science toolkit to take on the challenges and opportunities of these shifting energy systems. And one of those major opportunities is battery storage in ERCOT in the Texas market. So that's what we'll focus on today. But if you need to, get in contact with us, our 160 people worldwide, supporting over 900 customers. We'd be happy to help discuss how we could potentially earn more money in some of the open markets around the US and worldwide. What we do in North American markets spans forecasting, control, and optimization. Very briefly, we provide long-term revenue consulting for investment decisions on battery storage as well as other front-of-the-meter energy assets. We do provide short-term nodal forecasting as a key input to our optimization. We'll talk a little bit about that today. And then when we get to control of assets, we do have an EMS that we built in-house. We're on the Gen 3 now that actually reads relevant data, puts dispatch commands into battery storage and other flexible energy assets. And we do a lot of work on virtual power plants and demand response. So we can talk about that offline if those are of interest to you. But I think what we're going to talk about today mostly is our trading as a service, as well as the bid optimization software that we've developed for battery storage, specifically focused on the ERCOT market here, although we are active at CAISO as well, and soon to be PJM and other markets with batteries to complement the demand response resources we've had in market for several years now. So before Ali to talk through, go for it.
Before we dive into the trading strategies, I want to take a few minutes to have like a moment of zen on why even batteries are useful compared to, like, we all know this. It still is pretty helpful because it comes to how we can make money off of them. The how goes to where they add value. Batteries are very fast, especially lithium-ion batteries and zinc. They're pretty fast, which means that they have instantaneous ramp rate. So they're really good at replying to all the frequency deviation, like all the grid needs when they come up. They can either participate in energy markets, can be day ahead or real time, or for reliability services. Small frequency deviations are helped, alleviated by regulation services. And when it comes to large frequency deviations, it's RRS. ECRS was a service that started last year, in June of last year, almost a year ago, in ERCOT. And the premise of that was whenever there are mismatches in load forecast, generation, anything that may happen that will have ramifications in the stability of the grid, but they're still not showing up in frequency deviation, ERCOT will try to alleviate them through ECRS. And so batteries can help with all of these, and that's how, like through stacking, how you're participating in different ancillary services or energy in different hours of the day, given that they have limited duration, that's how you can maximize their value. And as an example, Modo Energy put this, like they looked into the 60-day reports. For people that don't know about this, ERCOT is very transparent with how any resource in ERCOT makes money. They publish everything called in 60-day reports. There are things that don't show up on 60-day reports, because in 60-day reports for any specific resource, you can see how they participated in physical markets, which would be ancillary services, energy, that they participated like as a physical asset. It's just not easy to understand if a resource has also, if traders that were in charge of the asset had financial positions that people call DART trades. So with that caveat, that 60-day reports that Modo Energy put together don't have, we don't see if they're financial positions. This is what we know. This is what we know, that there were few of these market participants that made a lot of money. And there were few of them on the other end that did really poorly. And it's very important to look into the stack of like the differences that like there are companies that they majorly participating. If you look on the left side of the graph, the color of rig up and rig down is blue and green. There are, you can see that, for example, like the Gambit project, that's the most on the left side, that has like majorly was participating in rig up and a little bit in energy and way less in other resources. Very interesting, because that means that they cycle through their battery a lot. And that's a very important thing to remember, that there are companies that they want to make the most out of their resources, and they're very successful at it. Eolian is one of those companies that they've been very, like they have a few assets that in 2 or 3 years of operation of the asset, they made their money back, and that means that violating their battery warranty, because you're cycling through the battery way more often. And one of the things that I will show you is that the strategy that we have developed without violating those boundaries of like what you need to keep your warranty in a good place, we can make the same money, or we have made the same money. And on the other end, like assets that don't make money, like those are really assets that most of them are problematic. It's not that, like the other end is like usually assets that have been offline most of the times, or they even can't follow base point. Base point meaning that like if they receive a command, they can't follow it. So we looked into, since almost the start of the ECRS market, the past 12 months, let's say June of 2023 to the end of May, in a perfect foresight situation, what would have been the amount of like the percentage of money that can be made in different ancillary services? And bear in mind that perfect foresight is something that we really have to be careful about defining it. Everybody can have their own definition. The definition that we have at GridBeyond is participating in all of the markets, not financial markets, just physical, meaning that the day ahead and real time physical market, ancillary markets, energy markets, and ancillary markets, and keeping the limit of 1 average cycle per day throughout the year. That's what we define as perfect foresight. And you can see that in the past 12 months, in that perfect foresight situation, 63% of their revenue would have been made in ECRS. Another thing to also like be very clear in definition is that when people talk about breakdown of revenue between rig up, rig down, and energy, the way we define it, that's why we call it RegOp net, is that if we're participating in RegOp and we're being dispatched in the RegOp service, we're going to discharge energy. And that energy is what we put into the RegOp bucket, because we participated as a RegOp provider of capacity. And as a result of discharging, we also made money in energy. And that money is what we put in the RegOp net bucket. You can see that in a lot of months, even reg down net is negative. It's because you're paying money to charge. It sounds like an awful thing, but it's not, because what happens is that at least you're getting paid a little bit of money on top of to compensate toward charging your battery. So if you're really smart about predicting with what frequency you're going to be called on the reg down side, you definitely can get paid to essentially manage your state of charge. If you need to charge your battery, why not to get a little paid for that as a part of a reg down service? And there's a little bit of payment that you can see comes from the ORDC payment. ORDC is like, we can talk a little bit more about it later, but that's there. ERCOT has payments that if you're a resource, that you're online, as long as you're just available and you have headroom that you can be discharged, even if you're not discharging, you're going to get paid for ORDC, like the scarcity during scarcity events. If there are questions about that, we can get to it back during the QA session.
And let me just jump in there with maybe two points, Ali, if you go back one slide. One is just on the Q&A. Please do use the Q&A feature to ask questions. I see someone just did, so thanks for that. But let them, please, do send in some questions. We'll have time to cover them at the end of the session today. And then the other piece, just observations on this, and this is something that Ali and I talk about a lot, is you can see how weighted the revenue is in just several months, right? In this case, August of 2023 was over 50% of the annual revenue for batteries, and that's probably within August. That was probably a few days. So when we're thinking about revenues in ERCOT, there's a high premium that should be paid to ensuring uptime of the asset during those high price hours. We work on that in strategies such as not, doing regulation services day 3 of a heat wave, for instance, right? We've seen inverters blow, and then you're out of the money for the rest of the heat wave, certainly. And there's other sort of operational considerations that we'd be happy to discuss maybe in a more detailed session offline around how to actually optimize around physical parameters of the asset as well. But this is sort of the I guess financial view, perfect foresight. But we're happy to talk about sort of physical optimization as well, as that can greatly impact your availability during those hours where you really need it.
How did our optimizer perform last 12 months? Our optimizer, so we're looking at this case. This is for a demo account that we have. Like, a demo account is not tied to a physical asset. Like, we're trying to anonymize everything. We're using South Hub as the price hub, and we're modeling a 2-hour duration battery. But this has been live. Like, this is a live performance of how our optimizer has done. And you can see that I have it in the next slide, that the perfect foresight that we had was 86.6%. That's 86.6% was our, in the past 12 months, our perfect percentage of perfect foresight. What does it mean? It means that, like, for example, like in month of August, you can see that, like, if the perfect foresight would have made, like, the numbers in here on the x-axis, everything is dollar per kW month. If perfect foresight would have made, like looks like it's $210 per kW month, our optimizer in live, dealing with all, like, the challenges of ancillary deployment, etc., made 190, for example. Like, that's my read of the graph. And you can see in different parts of the blue is the perfect foresight, orange is our optimizer. And if you, it's so one thing that's very interesting in here from this graph is that in months that there's a lot of money to be made, such as August, June, our percentage of perfect foresight has been really high. And in months such as February of this year, March of this year, that there has been way less money to be made. There's not volatility in the market. We also, our percentage of perfect foresight has been in the range of 75%, which is still good, but it's not as stellar as like the 90% that we have during the really volatile years, volatile times of the year. So putting everything together, I have two comparisons in here. One of them is a trading 12 months. Number that everybody likes to talk about is dollar per kW month. Like how much, if you have a toll, for example, you're paying a fixed fee for your toll. How much would you have made from that asset? So tolls are now in the range of $8 to $12 per kW month, and the optimizer made $31 per kW month in the last 12 months. So they can essentially make 3 years the value of that toll in 1 year. And the percentage of perfect foresight, as I said, was 86.6. Since the start of the year, so that you can see how we compare with the data that Modo Energy has published about the assets in the market, the percentage of perfect foresight, as I said, has been lower because there has been less of volatility. Even that, with that in mind, we made the annualized of $92,000 per megawatt. And on this graph that Modo has published, you can see that like 92,000 is just less than the first project in the market. And it's very important to also note that the very first project in the market, that project is mainly in regulation markets. And that's when you're definitely, if you're only making money through regulation services, you're taking the battery to cycle very quickly every day, all the time. That means that you just don't care about the warranty limits. Like you just don't care about the warranty. Warranty is going to be violated. And some companies, as I said, are okay with that because they want to make sure they make their money as fast as possible. Our optimizer doesn't do that, stays within the limits of the warranty, and still returns really good money.
Ellie, before we get to the next slide, if you could just go back on the sort of, ranking, I guess, right? One thing to note here is, as you mentioned, this is for a hub south asset, not an actual nodal asset. So, a lot of the sort of revenue that an asset will see is going to be predetermined by where it is in ERCOT. And so that's one of our services around sort of long-term forecasting at the nodal level that we help before the investment decision is made on an asset. So, it can be maybe not unfair, but slightly, ranking assets that are all at different nodes with different dynamics around the ERCOT system doesn't really get to the full extent of the story, right? There may be a congested node and a battery's in a good position, and you can't, sort of up and move your battery just because you think the nodal pricing is going to be better somewhere else a few years down the line. So a lot of the sort of dynamics here were actually predetermined, I guess, when the investment decision was made. So just to note, especially as we talk about saturation of ancillaries, the energy positions that assets can get, that's going to be increasingly important, is to ensure that the assets that you're looking at are well positioned physically within the ERCOT market to take advantage of energy pricing as the ancillary services, which are system-wide, start to decrease in value. And then I'll also just note before, I know we have a question on ancillary services next here. Ali mentioned tolls. This is an area where a lot of development right now, both at GridBeyond as well as some other companies doing great work in the space. For developers or asset owners that are potentially more risk averse, or they want to recycle the development capital for an asset more quickly than waiting to, sort of get the merchant revenues coming in the door, there is potentially a case to be made that maybe a developer, an asset owner, is better off taking those sort of tolls, even if it's a lower price given the current market dynamics, because it allows them to recycle that capital into more project development. So if you're interested in talking about tolls, feel free to follow up after the webinar, and we can talk about sort of tolling options as well that might make sense depending on sort of what assets you have and the strategy that you have.
Thanks, Alden. Oh, thank you. Thank you. Even like who knows about what the future is going to hold in ERCOT? And we're going to talk about that. But even like, look at this. last year, even with one cycle limit of GridBeyond, 376K per megawatt. Bear in mind that the cost of the project now is something in the range of $1,000 per kilowatt being installed. So if this condition would continue like exactly like this, projects would just make all of their money back in like something in the range of 2 years and 10 months. Yeah, but who knows for how long it's going to continue like this.
That's a great segue into the sort of piece around ancillary services saturation. We've been talking about ancillary services saturation in ERCOT, especially for years. And part of that's given our experience trading batteries in the UK market, which experienced similar dynamics around ancillary services prices coming down significantly versus what they had historically seen. And so even now, you know, most of the highest performing assets in ERCOT are primarily doing ancillary services. And primarily, I mean 80, 90% plus of their revenue coming from ancillary services. So the big question I think on everyone's mind is, when does that start to change? And you know, when does potentially the amount of megawatts in the ancillary services, you know, become less than the amount of megawatts of batteries installed? That'll probably be sort of one break point here. But we wanted to ask the folks on this call via a poll that we'll put up around ancillary services saturation. Sort of which, you know, when are you expecting this in your projects? And really tap the sort of group here, given the folks we have on the call around sort of your perspective on ancillary services. So Lucy, are you able to put the poll up here? Oh, great. Looks like it's on the screen right now. We'll give folks maybe about 30 seconds to answer, and then we'll look forward to talking through sort of your responses as well as where Shams and Ellie think the market is going here. We should have made it anonymous now that I'm seeing it. There might be some bias once everyone sees how everyone's voting. But yeah, would welcome sort of, you know, where you think this is going to happen and how you're building this into your investment cases for battery storage. Got about 43% participated. Can we get it over 50? Anyone have a last minute answer they want to throw in here? All right, we're starting to see things start to slow here. So I'm going to end the poll here. And I think you all should be able to see the results. So you know, there's actually no one who's thinking that this is going to happen in the second half of 2024, which interesting. We've got, you know, sort of 14% thinking it's going to be the first half of next year. The majority, or the plurality at least, 41% thinking it's going to be second half of next year, and then about 9 and 14% in the first and second half of 2026. And we didn't include an option for beyond that. Maybe we should have there. But at least, Shams, I'm curious as to your thoughts. You know, where did this stack up? Where do you think this market is going to go in terms of when are we going to see a decrease to, you know, the 50% plus of sort of ancillary services revenues?
Ali, you want to go first, or?
Oh, I know you have really good ideas, good thoughts. Please go.
Yeah, I think, you know, one of the big changes come to the market is real-time optimization, and that will have a significant impact, especially on ancillary service prices. So given that time frame has been moved up more towards early 2026, I would expect revenues to decrease quite a bit in that time frame.
Shams, I remember, because like we've had many conversations about this internally. I also really admire your thoughts around EPA regulations. Would you please also share them with others?
Yeah, so other big changes in the market coming is, first of all, there's the Texas Energy Fund, you know, where the state is subsidizing the development of sort of dispatchable generation, which typically just means gas generation. So with that, you know, they've had a huge interest in that, but given the dollar amount that they have, like $5 billion to spend on it, that could result in like maybe 7 gigawatts being built with that funding. So that will have some downward pressure, but as Ali pointed out, there are EPA regulations that have just been enacted And those will have a significant impact on coal and some gas units to retire. So with that, that could possibly offset that Texas Energy Fund additions, if not more than offset. ERCOT analysis shows like 12 gigawatts retiring in the 2030 timeframe. So you have both of those forces working against each other.
Thank you.
And Ali, what about you? When do you think it's going to happen?
I think everything that Sham said makes sense. Like we are also in the market, like ourselves, right? When it comes to tolling agreements, it's a topic that we deeply care about. We deeply care about like all that we do for our clients and positions that we take, and the whole idea of everything decreasing by 50% is not the worst thing in my mind. It's like if even if current is like 30 going to 15 in 2 years, as long as it doesn't crash way more than that, these projects are still going to be very profitable. So like the duration of it, I don't have any more well-formed thoughts compared to Shams.
That's great. I take the opportunity to grill you, so.
That's fine. Well, what goes into a successful bid optimizer? Because so far we talked about our performance, the optimizer performance. If you want to build it, what goes into it? One very important component is having a very detailed understanding of all the ERCOT regulations. And it's an area that ERCOT keeps coming up with new changes. Shams will talk about them at high level. There's just a lot to keep track of, but like you need to just understand all the details of how a generator gets paid, how battery specifically gets paid, because there are some minor differences when it comes, because battery also has a load side compared to just a generator. We need to have very high quality forecasts of energy and ancillary prices. On top of the prices, we also need to have forecast about how ancillary services are going to be deployed. Because remember that if you have, for example, rig up and rig up gets deployed, you're going to discharge and you're going to get paid for it in real-time energy. And that means it's a pressure on your state of charge. So you have to be really strategic about what are the hours that you're providing each of the ancillary services. Forecasting of scarcity events is another one. A, prices are really go up during those events. B, the ORDC chart that I showed you, the ORDC, like that I said, is 1% in a perfect foresight situation that's throughout the year would have been made in ORDC. That's something that is not, ORDC is the adder, the payment adder that gets added to the LMP, locational marginal prices. And for the sake of just being available, as long as you have available headroom, you're going to get paid for something called ancillary service imbalance. That's an area that if you have really good quality forecast, there's free money to pick up just for being available. The other part is, so far we talked about all the forecasting that goes into like energy and ancillary services. The other part is, are you gonna make any changes in your trading strategy? One very important piece is, like, let's say your warranty says that you can deploy your asset 365 full turns in the whole year, cycles in the whole year. Are you going to do one cycle per year, or can you be a little bit more strategic about it? What's going to happen if like you're in the second day or the third day of a heat wave? Is that going to make any impact because of the stress that it puts, the heat waves put as a stress on the battery? Those are all details that go into a really good optimizer that would maximize value for an asset, physical asset. Shams. This is what are your thoughts, about regulations?
Yeah, so I think in the ERCOT market currently there are a lot of big changes, market design changes coming along that have either been already adopted or in the process of being adopted or implemented. So it's very important that people, if you're participating in the ERCOT market, to stay abreast of these developments and sort of recognize the impacts it'll have on your strategies and your revenues. So one of the more recent ones is NPR 1186. So 1186 initially was quite more onerous than it is now. So initially, ERCOT wanted you to have a certain state of charge based on the amount of megawatts of each ancillary service that you sell. But that has, and actually they would, if you didn't have sufficient state of charge, they were proposing, charging you for failure to perform because you didn't have enough state of charge. But all that was thrown out by the PUC. What we have right now is essentially with NPR 1186 is that SCED will not let you discharge unless you have more than the stated amount of state of charge that ERCOT wants you to have. So at the beginning of the hour, let's say ERCOT wants you to have 1 hour's worth of state of charge for the ancillary service you're selling. And if you don't have 1 hour's worth of state of charge, let's say you have half an hour's worth of state of charge, then for the first half hour, the SCED system will not let you sell energy on top of your AS obligation. So after that, at the beginning of the next half hour, you will be able to sell energy on top of your ancillary services. So that's just a systematic design change that ERCOT has made, and it's going to be implemented on the 27th of this month. Of course, NPR has other aspects as well, but you can look into the NPR and see all the different changes that ERCOT has made. The other one related is 1204, which talks about these changes in real-time co-optimization. So once real-time co-optimization is implemented, the SCED, the security constrained economic dispatch that dispatches the system, will actually take into account the state of charge. So when it's awarding energy or ancillary services to your resource, SCED will look to see if you have enough state of charge for you to be awarded that ancillary service or energy. And this was a big debate that I had with ERCOT. ERCOT was initially wanting to put in the qualification requirements in there so that, if you qualified for a 2-hour ECRS product, if you were to be awarded ECRS, you had to have 2 hours worth of state of charge, even though SCED only awards you for every 5 minutes. So actually, I was able to convince ERCOT to at least provide us the flexibility in the NPR that we decide later on what that duration should be. And I argued for 5 to 15 minutes. Of course, ERCOT is hesitant to agree to that, but at least they agreed to putting in the protocols that value could be different than values used in the day ahead or used in the qualification process and in the RUC engine. So we have that built in. So we left the debate of what that amount should be for a future date. But that is an important, really important for batteries that we get that right. Of course, real-time co-optimization itself is a big change to the market. I'm working with ERCOT and stakeholders to get the ancillary service demand curves right. That's very important in how market prices are set and ancillary services are procured. And then, there's another aspect of real-time co-optimization that people didn't quite appreciate, which is that currently, when you sell ancillary service in the day-ahead market, you have an obligation for 1 hour in real time. And for any sort of intermittent resource like wind and solar, they typically don't sell ancillaries because of that risk that their resource might not be there in that hour. It's very risky for them to sell ancillary services. But once you come to real-time co-optimization, you're only selling ancillaries for the next 5 minutes. So if you have curtailed wind or solar, it's possible and also, I guess, profitable to go ahead and sell that ancillaries because you're only doing it at 5 minutes at a time. So even wind and solar will get into that market, which is why I was kind of bearish on the ancillary service prices once you get into real-time co-optimization. So that's in a nutshell, some of the big changes. There are a few others, NPR, that are listed there that also impact the ancillary services market and how batteries operate in that market.
Very helpful. Thank you. We talked a lot about the importance of quality of forecasts. And in this in the next few graphs, I'm going to show you guys how our internal forecast has worked in the past 30 days. Like very simple, 30 days, like nothing, like no specific like choosing of times, past 30 days for South Hub. And you can see that so our forecast generally, so there are two lines in here. Actual is in purple, and the green line is the median forecast that we have, because we have a statistical forecast. We don't generate just one forecast. We have all the percentiles. This is the median, 50 percentile. Shape is generally the same. And it's very important that like on the days that power prices peaked, also our price forecast peaked. It's like, it's just important to know that, okay, this is going to be, is this going to be a high price day or is this going to be a low price day? Because going back to when we were earlier talking about days that market is more volatile, you're going to do differently in the market. And this is one way, like if you have a good forecast that shows us that prices are going to peak tomorrow, it will make a difference in how we optimize. This is for power prices, day-ahead power prices. Similarly, this is also our forecast for ECRS. Remember, we do this for all ancillary services and energy, day-ahead and real time. Pretty good also, like our shape has generally followed, and on peaky days, we also have peaked. Pretty happy about it. So, and this is a question that I've heard Frodo ask from Gandalf. That like, hey, I have this warranty, just like once per day for the whole year. Should I do it the same across all year? Should I like cycle the same, or is it worth that during some times of the year they cycle more? And Gandalf says it depends on the market regime. And this is what we do, like what we did in the past trailing 12 months. You can see that on the x-axis, it is the date, and the y-axis is the number of cycles that we use as an input to our optimizer. The average of the whole thing is 1 cycle. So we're not infringing any warranties. At the same time, on those days that you're going to make the most money from the battery, such as in August and like those market peak days. Or algorithms, it's not also like just like a number from thin air saying that, hey, on like high volatility, I want to do 2 cycles. On low volatility, I want to do 1/2. Like the algorithms will come up with the number of cycles. It varies day by day. And wanted to show this as an example to you guys, like a very recent 3-day period that markets were generally volatile in June, just last week. You can see that prices went up like to a couple of $100. You can see that how our optimizer was stacking, like the graph on the bottom left shows how we stacked ancillary services. Like we have different ancillary services over there. Remember that we are also using rig down as a way to charge the battery. That's why like generally in low price hours, there's more rig down because they want to charge. And you can see that rig up, the magenta color, is used mainly during high price hours, get paid for capacity, and if there's discharge happening, you're going to get paid extra for energy. And it's not always obvious. There are sometimes like the rest of them are RS and ECRS deployments. And the optimizer chooses all of those ratios because it has a limit on how many cycles it has to take by the end of the day and the money that it wants to make. And you can see that the bulk of the revenue was coming from ECRS and REGA in the 3-day period. So we talked about all of these components that go into having a successful optimizer. Is it hard to build the whole optimizer from scratch? That's going to do really well in the market. I argue it's really hard. Getting the regulations right, that's definitely a big piece. Having good forecasts of like prices and ancillary deployments, that's pretty hard. After that, it's a mathematical problem that you're solving. Writing that math problem is a pretty big piece on its own. And something like the last item is something that I've seen it in many places that they have their challenge. It doesn't sound, it sounds like an easy thing, but when it comes to reality, real world, whenever you're communicating with an asset, everything has to be stable. The communication from the asset to ERCOT, to your systems, and your systems not failing. These are all pieces that making them stable and reliable, it is a very, very hard problem. And we've spent a lot of time and energy on it to make sure that our systems are reliable. Time for Q&A, Alden.
Great. And thanks for the presentation, Ali and Shams. Did see some questions come in. Some of them we answered via the chat. So let me know if there's any additional clarification needed from those questions. But want to start with one on a long duration batteries or sort of more flow batteries, let's say, batteries that can support more than one cycle per day. So Bruce asked, which strategies or services do you see adding the highest incremental revenue for storage assets that can perform more than one cycle per day, e.g. flow batteries?
Yeah, I think flow batteries will definitely have the advantage that they don't have limited discharge, but like they can be like for 6 hours, 12 hours. And like when you look into how an optimizer works, especially a successful one, it will take into account all the possibilities of getting discharge. So as, for example, this is something that we saw in August of last year and early September. There were days with 7 hours of discharge of ECRS. Our optimizer did really well. And one reason it did really well was that as it expected, the deployment of ECRS to come in, it was putting less and less volume on how much it was offering in the market because it just expected it's going to have lower state of charge as the day is going by or the evening ramp. So I can imagine, and those are days that, like Alden was talking about, few days in a year that are going to make the bulk of your revenue. Those few days, like September 6th of last year, August 27, August 17, there were days with a lot of deployment of ECRS, and if somebody is not bound by how many hours they can discharge, and even if they, as of now, we're talking about prices for now, like as if prices stay the level that they are right now, even if they offered ECRS all day without any fear of deployment, that definitely is an added value that a flow battery can have, like just not being afraid of state of charge getting low.
Great. And maybe I'll just add, in here, flow batteries also, as Ali mentioned, often have longer durations than lithium ion. So typically in ERCOT, we see durations now of lithium ion going in at 2 hours. A few years ago, that was 1 hour, before the state of charge sort of rules were changed, and ECRS became a product that you needed 2 hours state of charge for. We have gotten questions as well on, do we expect there to be the case for longer duration batteries in ERCOT, 8 hours plus? I think no, for the foreseeable future. The cost of these batteries is still around what lithium ion is, for the most part. And the sort of TB2 spreads in ERCOT are really where you're going to make a lot of energy revenue. There's not as much of a case for sort of a TB8 or even a TB4, just from the spreads that we see in the ERCOT market generally. That leads well into David's question as well. So David said, as more solar gets built out, the solar hour LMPs in the middle of the day will become more negative. Batteries will get paid substantial dollar amounts to charge and can make money in the late evening hours at fairly low LMPs, but still have a significant spread between the solar hour LMPs and the late evening LMPs. Just from my perspective first, and I'm curious, Ali and Shams, on yours here. We do start to see the duck curve of solar generation start to impact ERCOT, or has started to impact ERCOT already, starting to look more like CAISO, where we've experienced negative power price in the middle of the day pretty commonly now, given the amount of solar build out in CAISO. But I think that it's probably still maybe a little bit behind in terms of the energy only spread that you can see, and which is why you see batteries still relying so much more on ancillary services revenue in ERCOT than in CAISO, which is much more driven by sort of energy dynamics in the CAISO market. Ali, Shams, I guess I'm curious, would you agree in terms of sort of the opportunity for batteries to take advantage of those low solar hours and high evening hours? Do you think that's a viable strategy going forward?
Shams, if you want to go first, please go.
Okay. Yeah, so I think that is going to be a very important strategy going forward, with all the solar development and stuff, and the ancillary service, as we talked about, with real-time optimization and so much batteries coming online. I think ancillary service markets are going to be impacted. Those prices are going to be impacted. So more of these battery resources are going to depend on that spread. And I think, we are going to see those California kind of situations where daytime, peak hours, you're going to load peak hours, you're going to see prices even go negative. And that spread is going to be healthy enough for batteries to make money on that. That peak hour versus the solar ramp down hour. There should be a nice stream of revenue coming from that.
I want to add to what Shams said. So like a lot of these projects, and that's something I have learned from Shams, that a lot of these projects, especially the new ones, are on PTC, production tax credit. And with PTC, there is a break-even point of, like, at what point is it worth receiving that tax credit? And that line is not infinite. It's not negative $250. It's somewhere in the range of negative $30. So even with the duck curve being created more and more, how much prices are going to go negative? There's a limit to how much that goes negative. At the end, like, a battery makes the money from energy arbitrage, high minus low. If on the low side you can go to a limited low, it definitely is going to help for sure. Like, you're going to get paid to charge undoubtedly. Or if you have a hydrogen facility, whatever it is, like, you're going to get paid crypto to have a load. That's awesome. Go for it. That delta will definitely increase. I think it still really matters of when you're looking at the all delta, like, what's going to happen to that high? The low is going to get lower. It's going to go to negative 30, let's say. But if that high also gets deeper and gets higher, then it's a great opportunity, because that's very possible. Like, if it's a dark curve situation that, like, between the wind falling down and solar not having picked up yet, a few hours only, not being long enough for a gas, like thermal asset, like, to kick in, that's a really good time that, batteries make their money. That means that the high can also get higher. So it really, I think, what all that Shams said, plus at this point, I haven't done that analysis to know how much you really can make extra by having more solar, by having that dark curve.
And I think it's a great area for potential future conversations or exploration as we look at the future of the Texas energy mix, right? I think Texas is expected to be, if not already, the largest renewable energy generating state at some point this year. So those dynamics around solar, as well as the existing wind that's been in Texas for a while, are certainly going to be ever more salient for battery energy asset owners and developers. And we've worked with several developers in ERCOT who are looking at co-location, maybe not, sort of hybrid systems, but at least co-located systems of BESS plus wind or BESS plus solar to help, alleviate congestion as well as unlock additional value from those renewable assets that are on the ground already. So I think those are the only questions that we saw come in. So with that, I think we'll conclude about 5 minutes early here. Really appreciate Ali, Shams, you both joining us on the webinar, sharing your expertise with us. And thank you, Lucy and Solar Media, for all of your help to coordinate this webinar. We'll follow up and send some additional information about GridBeyond and our offerings. And we would look forward to a conversation with any of you interested in optimization of battery storage and trading in the ERCOT market. So thanks so much for your time and have a great rest of your day.
Thank you.
Yeah, thank you.
Bye.